ಎಲ್ರಿಗೂ ನಮಸ್ಕಾರ. Hearty welcome to Jnanarjane, Empowering Excellence. Friends, today we have arranged a very interesting session, Reassessment under New Regime. To enlighten us on this topic, we have an eminent chartered accountant, CA Naveen Khariwal is with us. On behalf of Bangalore branch and on behalf of all the participants here, hearty welcome to CA Naveen. Hearty welcome, CA Naveen. Friends, income tax as usual is a very important topic for all of us. So reassessment, again, a very important topic under new regime. There are so many issues. To enlighten us, he is an expert. He is going to tell all the nitty-gritty of section 148, 147, all the connected sections. With that note, once again, hearty welcome to each one of you. Participants, you are the reason for this program. Hearty welcome to each one of you. I'll take a minute of yours to inform the upcoming program. Tomorrow we have planned a very interesting again, new various opportunities available under GST, customs and foreign trade policy. So CA Madhukar Hiregange is going to impart his knowledge on that topic, various opportunities available to chartered accountants tomorrow 4 p.m. to 6 p.m. And 12th, 13th and 14th, 3 days workshop. It's a sub-regional conference. From 12th, 13th and 14th, 3 days conference, 9 hours of CPE. There is no fees for that. The topics are much more interesting. Is PMLA, Benami law and black money. So senior advocates and chartered accountants across India are coming and enlightening all of us in the new areas of practice, PMLA, black money and Benami law. I request all of you to register that program. It is going to be on 12th, 13th and 14th evening 5 p.m. to 8 p.m. Request you all to register. There is no fees. Kindly register that program and understand the new law. A very lucrative practice opportunity also available. Even otherwise, as an advisor, it is worth understanding all those laws. So, and 19th, 20th and 21st of this month, again, a very interesting topic is tax audit and various connected issues. So it is actually program coordinator is Naveen Khariwal. He is going to enlighten us and he has collected, organized many experts, eminent speakers across India to help us to understand the nitty-gritty of tax audit and various other issues connected in that income tax law. So I request all of you to register that program too. With that note, once again, hearty welcome to each one of you. Over to Divya.
Thank you, Chairman. A very pleasant good evening to all the participants and to today's speaker. To give a brief introduction about him, we have Naveen Khariwal sir with us. By qualification is BCom FCA. He is in practice as a chartered accountant. He is partner in HC Kincha & Co and partner in HC Kincha and Associates. He comes from a family of chartered accountants. His specialization is in direct taxes. He is co-opted member of Direct Taxes Committee of ICI for the year 2021. He is also member of Central Taxes, Corporate Laws and GST Committee of FKCCI Bangalore. He is member in Finance Advisory Committee of Karnataka State Cricket Association Bangalore. He is also member of study groups or study circle of Committee of Chamber of Tax Consultants Mumbai. He was also part of team nominated by Bangalore branch to represent before Honorable Justice R.V. Ishwar Committee for Simplification of Taxes. With this very brief introduction, I wholeheartedly welcome once again to you for today's program, sir. Hearty welcome to you.
Thank you.
Over to you.
Thank you, Divya, for your introduction, and thanks, Chairman, for inviting me on this topic. Now, what I would like to state is that, like your pandemic is there everywhere. This Corona pandemic, which has started from last 2 years. So you have 148 notices galore. Everywhere you have 148 notices. So if you put in the chat box, all over India, when I'm talking to chartered accountants, I'm asking how many notices your office has been issued, your clients have been issued. So there will be a competition now. Say, for example, my office has got 10 notices, other offices got 20 notices, third office has got 100 notices, etc. Now, why this hurry? So because this pandemic which is there everywhere, your corona, similarly notices at 148 has engulfed the entire nation now. The reason is threefold reason. What is the first point? First point, my dear friends, is on March 20th, 2020, there was a lockdown announced. So 31st March 20, what was the due date for which year that notice could be issued for 148? It was assessment year 13-14. For assessment year 13-14, 6 years from the end of relevant assessment year, it will end on 31st of March 20. Fine. So what happened when from March 20th March when it started lockdown, and also this ordinance also came into effect. But here I have a grouse against the department. I have a grouse against the central government. For 10 days delay for assessment year 13-14, just 10 days delay. You have given the department 1.5 years time. Up to 30th of June 2021, they have got time to issue notice for assessment year 13-20, due date of which expired on 31st of March 2020. So 30th June 21, you have given them how many months time? So, anyway, it's a beneficial for the department. For 10 days delay, you have given them, 12 plus 3, 13, 15 months extra time. Anyhow, when we come there, we will discuss the other issues. Now, I would like to share my presentation and we will move into the new regime under 148 as such. Yeah. Let me just begin my presentation now. Let us begin from the Finance Minister's speech. So if you see, my dear friends, para 153, reduction in time for income tax proceedings. Here the Honorable Finance Minister is telling, presently an assessment can be reopened up to 6 years and in serious tax fraud cases for up to 10 years. As a result, taxpayers have to remain under uncertainty for a long time. At para 154, the Finance Minister is telling, therefore, I want to reduce this time limit for reopening of assessment to 3 years from the present 6 years. And in serious tax evasion cases too, where there is an evidence of concealment of 50 lakhs or more in a year, can the assessment be reopened up to 10 years. Even this reopening could be done only after obtaining the highest approval from the highest authority of the land, that's Principal Chief Commissioner. Then, so this is the explanatory memorandum. Now, what was happening earlier, all my experienced professionals you would know, there was a concept of block assessment. Post 95, 1st of July 95, say this concept of block assessment started, where you used to fill one form 2B. Form 2B used to fill 6 years return of income total. You used to fill in that return, and tax rate was 60% along with surcharge, etc. The concept of block assessment 1795. Then what happened? With effect from 1st of July 2003, concept of block assessments were done away with, and what came in was your present 158 ABC. So that section came into effect 153 ABC and your D. Then what the department is of the opinion now, if you see the explanatory memorandum, they are telling even this 153C, A, B, C, etc. is also proving to be highly litigation prone. Therefore, the experience with this procedure has been no different as compared to the block assessment regime. So therefore, now they are telling, I am going to do away, I am going to abolish, I am going to amend. Even 153 APC have now been removed from the statute. If you see here from 1st of April 21, altogether, a new set of sections have come. Your old section has been substituted and some new sections have been introduced like your 148, etc. Now, again, the department is telling, yeah, due to advancement of technology, the department is now collecting all relevant information related to transactions of all taxpayers from third parties under 285B of the Act, Statement of Financial Transaction or Reportable Account. Similarly, information is also received from several law enforcement agencies. This information is also shared with taxpayer through annual information system under the section. Anyway, we will go through. I am just taking you through the explanatory memorandum. So we move further. Now, this is the scheme of the Act, my dear friends. 147. So what was the earlier law? Income escaping reassessment, income escaping assessment. There was 147, there was 148, there was 149 and 151. Now what has happened is 147 is completely substituted. 148 is introduced. Again, 149 time limits have been reduced. And 151 also. What was one approval? Now you have a host of approval, spate of approval. Now, this is the scheme of new reassessment. 147 is assessment of income escaping assessment. 148 is issue of notice for reassessment. 148 is procedure to be followed before issuing the notice for reassessment. Nothing but provision of GKM, provision of judge-made law, that is Supreme Court in GK and Right Staff 259 ITR at page 19 has been now incorporated in the Act. There was no such section. I am telling you, whatever is the steps in GK and Right Staff, it was a judge-made law. Only because of the judgment. Now it has been incorporated in the Act itself, in the form of, in the guise of, in the garb of section 148A. So welcome amendment. Procedure to be followed before issuing the notice for reassessment. So dictum of Supreme Court has now become the law of the, which was the law of the land, has now been inserted in the statute by way of 148A. When we come there, we'll have a detailed discussion. Then 149 time limits for issuing the notice for reassessment. Here also, my dear friends, what were the time limits earlier? Up to 4 years from the end of relevant assessment year. Between 4 years, beyond 4 years, up to 6 years from the end of relevant assessment year. Beyond 6 years, up to 16 years in the case of a resident in India having asset abroad or having any income from asset abroad which you have not declared. Now, those limits, the 16 years for the, in case of a resident, wherever you have a foreign asset or foreign income not declared, has been done away with, abolished. By, because you have that UFIA 2015 Black Money Act. So there, they are going to catch hold of those persons now. No more in the Income Tax Act, 16 years limit is done away with. Don't think that they can escape. It is there still in the Black Money Act, which, chairman was telling, sooner or later we are going to have those sections now. Anyway, so now what is substituted, my dear friends? 4 years, beyond 4 years, the limit. Likely to have escaped assessment, concealed income was 1 lakh and above. Up to 4 years, there was no limit. So what is 4 years, 6 years, 16 years, now substituted by only 3 years and 10 years. We will see. Then again, this 151 specified authorities for authorizing issue of notice for reassessment. Here also, now they have made, you have to go till the highest authority to get the specified approvals. 151A is your faceless assessment of income escaping assessment. 153 is time limit for completion of assessment or reassessment. Now, let us go into the sections now. 147. We'll have a comparison. We will also discuss the issues also simultaneously. We will discuss the old provision, new provision. We will also discuss what are the issues which may arise. And please understand, there can be only an opinion, my dear friends, because it's not a tested law now. These are all new provisions. Courts will have to take a call. Whatever we discuss here would only be views. And it is for the courts to take a call. Now, earlier, what was it, my dear friend? Earlier, 147, there were the 3 magical words, reason to believe. So which was bread and butter for all the chartered accountants or butter and bread for all the advocates, etc. Now has been done away, removed, abolished, and totally removed from the statute. Reason to believe word is replaced now with what? Reason to believe word goes, and what comes in is information. Don't think that this is a new word. Reason to believe has now been removed from the statute. Word information has now been inserted in this new, in the newly amended or substituted 147. This information word was already there in 1987, my dear friends. Under 147B, then prevailing, before reason to believe, there was already this word called information. That they deleted during those days, and then came this reason to believe, and now they have gone back to the same old word, that is information. How many case laws, reason to believe? Right from Calcutta Discount Company, your Kelvinator, etc. So many Supreme Court judgments have now been nullified. No question of reason to believe. All this reason to believe, because of this fertile area for litigation, the words have now been removed from the statute, replaced by information. What else have they tinkered with? They have made the present 147 a very, very simple provision, my dear friend. What was the old provision? If you see here, this is the new provision we'll go through. Any income chargeable to tax in the case of an assessee. Any income chargeable to tax in the case of an assessee has escaped assessment for any assessment year, then the assessing officer may, subject to the provisions of 148 to 153, assess or reassess such income or recompute the loss or depreciation allowance or any other allowance or deduction. The deduction word was not there in the earlier 147 for such assessment year. This is a simple section now. So any income chargeable to tax, meaning to say your exempt income, for example, dividend, etc., your PPF accrued interest, etc., income chargeable to tax in case of an assessee. You know income, 2 within bracket 24 defines the word income. What is tax? Tax is income tax, 2 within bracket 43 of the Act. Who is an assessee? 2 within bracket 7 says assessee means what? Every damn person on this earth, including individual, HUF, firm, company, your cooperative society, your trust, etc. Every damn person becomes a person under the Act. Escaped assessment. What is assessment? 2 within bracket 40 of the Act defines the word regular assessment. The word regular assessment means an assessment made under 143.3 or 144. Similarly, 2 within bracket 8 of the Act defines the word assessment to include reassessment. So, who is assessing officer again? Assessment year is 29, period of 12 months beginning from 1st of April, so on. Who is assessing officer? 2 within bracket 7A, assessing officer is also defined. May subject to the provisions of 148 to 153. The section is crystal clear and now has been passed by Finance Act 21 on 28th of March 21. Mind you the date, please understand the date, 28th of March 21. And this section has now been passed. Clearly it says what? You have to follow the provisions of 148 to 153. If you want to bring any income chargeable to tax, which has escaped assessment, the learned assessing officer has to compulsorily, mandatorily follow the provisions of 148 to 153. In order to what? In order to assess or reassess or recompute any allowance or deduction or depreciation allowance, etc. for such year. You want to recompute, you want to reassess, please follow 148 to 143. Now, earlier, there was these 3 provisos to the old 147. What was the first proviso? The first proviso was very simple. Finality of assessment. Say in the case of a person, say in case of Divya, assessment order is passed under 143.3. Now department has got information. Earlier it was reason to believe. Earlier, because we are discussing the earlier provision. Now in Divya's case, order is passed in 143.3 and return income was accepted. Now the department wants to reopen such an order beyond 4 years from the end of assessment year. There should have been 3 types of failures, my dear friend. What are the 3 types of failures? In case department wanted to reopen the assessment which is completed in case of Divya. Point number 1, what it says, there should be failures. There should be 3 types of failures. First failure is, you should have failed to file a return under 139, or you should have failed to file a return in response to notice issued under 142.1. Earlier, even now, if you don't file the return within the due date, then department used to issue notices in 142.1. Hey, you have not filed the return of income, due date is over, please file a return of income. So what are the failures? First failure is failure to make a return under 139. Second failure to make a return in response to 142.1, or failure to make a return even under section 148. The fourth failure was failure to disclose fully and truly all material facts necessary for the assessment, for that assessment year. So in Divya's case, that first 2, many people, many chartered accountants are now telling, hey, there is a drafting error in the Act. If at all you did not file a return under 139 or 142.1 or 148, how on earth was order passed on 143.3? So naturally, having filed the return only, assessment is made under 143.3. So that may be a drafting error in the Act anyway. But what was it? 139 if you don't file the return, 142 if you don't file the return, it would have resulted even in best judgment assessment under 144. Anyway, that was under the old Act. Then here, we would have come out of these failures, 139, 142, 148, because order is passed on 143.3. But here, very, very difficult to convince the department. They are telling the failure. What is a failure? Failure to disclose fully and truly all material facts necessary for its assessment. Based on that, department could reopen, record reasons to believe, take the approval of the Principal Commissioner of Income Tax, and issue notice under 148. Then what we used to do, my dear friends, under the old regime, what even now you have to do under the old regime. Moment you receive the notice on 148, for heaven's sake, please see the date. Which date? Date of issue or date of service? Now, my dear friend, date of issue is very important. Many clients call me 31st March, they received the notice. Please understand very carefully. 31st of March, people have received notices. Date is 31st of March, no problem. You received on 31st of March. I told them file the return immediately. Even CS called me. I told file the return immediately. Why? File the return under 148 immediately on 31st of March itself, declaring, the original income only. What you declared in the your return filed under 139. Fine. Why? Because that would be the last date to issue notice on 143.2 is 30th June only then. So department had to issue 143.2 for that year before 30th of June. Now you cannot issue. So I told them you file the return immediately. Anyway, that is the one other part of the story. Now what happens when you have received 148 notice under the old regime, not under the new regime? When you have received, which is happening now, we will discuss in threadbare all issues. Don't worry, there is sufficient time. If you have received notice under 148 under the old law, what are the steps to be taken? First, please see the notice. Please see date of issue. Please see date of service. Invariably, it is going to be now one and the same, unless the department delays this because it is coming through your mail. What are they telling? It will come to into your registered portal account. It will come and sit there. It will come and sit in your registered portals account under the tab of 148. Anyway, so here you may not have that issue of issue versus service now. Long back Supreme Court held in R.K. Upadhyay and Chennabai Patel's case that the notice should have left the department as on 31st of March. You could have very well received the notice after say a week or 10 days or 15 days. I am not bothered. Word what the section is using 148 is issue rather than service. 143.2 is what? Service. 148 is what? Issue. So department should have left the department as on 31st of March. Earlier what we used to do as professionals, you used to take that brown cover where you used to receive hard copy of the notice. You used to take that brown cover behind, you used to see the post office now. For example, now Divya's office, we took that example 143.3 now, reopening, say it is under the old regime. So what she had to do is take that brown envelope first. Please see the seal there. Suppose it has reached the Pasanamudi post office, say on 1st April. 1st April, that seal is there of Pasanamudi post office, received in the hands of Divya on 7th of April. It is invalid ab initio. Why ab initio, sir? Why? Because 1st April, it has reached the Pasanamudi post office. You should have left the hands of the department on 31st March itself. 31st of March, and then it should have reached the post office on that day maximum. Then, the Supreme Court is telling you take reasonable time, 7 days, 10 days, etc. You serve the notice, I have no problem. So that was in the earlier old regime, my dear friends, when there was a concept of serving of notice, hard copy. Now there is no more such concept. It is going to come and sit in the registered, email ID or registered account of the portal. You would have given the email of the accountant, you would have given the email account of the client, you would have given the email account of the relatives of the client, etc. Now, even the WhatsApp is being developed, the department's WhatsApp, so it is going to come and sit there also, and you would have received message also. Now it is very difficult. And which email ID will they select? My dear friends, they will see the PAN database, they will see Aadhaar database, they will see your return database. In the return, whichever email ID you have given, they are going to serve on that. They are going to use a PAN database, whichever email ID they find or whichever address, etc. Similarly, your Aadhaar database. So now you cannot hoodwink the department, telling, I did not receive the notice at all. And mind you, forensic evidence is there so strong. If you were to go and see, if you were to go and see and open that, the portal, and she's going to see there, yes, let me not touch. I've received 148. Even that will be recorded by forensic devices. You have already, seen, but you have not clicked and you have not removed the notice anywhere. So this was the first failure, first proviso in the earlier assessment year. What we were telling you, under the old regime, practicality, what to follow, see the date of issue, date of service. For heaven's sake, after noting this down, there will be 3 words there in the notice: assess or reassess. You are confused, assessing officer. I have all the respects for the assessing officer, sir. In all humility, I am telling you now, this is a professional opportunity for me. A notice issued under 148 is a professional opportunity for me. So I am going to attack it from all corners, technically as well. So now, I have to make a case out of it so that my client can win. I am not in favor of avoidance of tax or evasion of tax. This is a professional opportunity for me. Now, when I see that notice, you are using the word assess or reassess. Come on, are you confused? You should be aware whether you want to assess or reassess. Having now recorded the reasons, having now issued the notice under 148, after recording the reason, taking approval of the principal commissioner or additional commissioner, as the case may be, under the old regime, you should know whether you are going to assess or going to reassess. Come down. They say again, this approval after taking satisfaction of, approval taken after satisfaction of PC81, PC82, PC83. So we have to now what to do, what is as our duty as a professional, as a client. You have to upload the return under 148. Gone are the days, my dear friend, you just can't write a letter. You used to write a letter. There is a Punjab and High Court, Haryana, there is a High Court judgment also, Iqbal Singh. That time they were telling letter is enough. Write a letter, write a letter, send it to the department. What we used to do in the earlier olden days. Yes, I have received a notice on 148. So kindly treat the earlier return filed on this date as having been filed in response to 148. Gone are those days. Now you have to necessarily upload the return on the portal. Though people will tell me, sir, portal was not working. No problem, sir. Please fill up a hard copy, file the return manually, write there that the portal is not allowing to upload the return. Therefore, as and when I am allowed, the feature in the portal is enabled, I will, upload the return under electronically. I'll upload the return in 148. Please file it in the Tapal and take seal or take acknowledgement or file it in your ask counter anywhere. In that letter, please write down, please question all these things, what I told you, assess, reassess, etc. And also if the order is passed during that assessment year, say for example, 13, 14 or 14, 15 or 15, 16 or 16, 17 or 17, 18, these notices which are receiving now, order is passed under 143.3, accepting the returned income. Please state that fact, enclose a copy of the order. It may amount only change of opinion now. You are going to tell it's a change of opinion now. And after that, you please also ask for a copy of approval, copy of satisfaction, recorded by the Honorable Principal Commissioner of Income Tax, 1, 2, 3, etc., as the case may be. Now, thereafter, you can also ask for the copy of reasons recorded based on the dictum of GK and Rights Act under 259 IDR 90. And file the letter, file the return, finish. Await now, what are you going to get? You are going to get the copies of reasons recorded. When you get the copies of reasons recorded, they have to give me as recorded itself. You cannot even, edit it. Verbatim reproduction I want. There are case laws to that effect. Don't edit the reason. You can't add to the reason. You can't delete the reason. You can't amend the reason. Take that copy of reasons recorded. When you receive it, file objections to the reasons recorded. After you file objections, my dear friend, the case should be pushed to faceless assessment. The jurisdictional assessing officer is not going to dispose of your objections. Understand carefully. Here the faceless assessing officer now steps in. And what they are going to do, the jurisdictional assessing officer, JAO, will push your objections to the faceless assessing officer. He is going to dispose of your objections. Thereafter, my dear friend, you try whether if they have disposed the objections not to your satisfaction, then go for a writ petition. You have to see, you can't penny wise pound foolish. You have to, give a thought here. Shall I file writ immediately? Your writ court will tell you, you exhaust all the alternate grounds. Don't come to me directly. GK and Rights Act, that's what they told you. Please go there, file the return. You file the return, ask copy of reasons recorded, get a copy of reasons recorded, file objections, then request him to dispose of the objections. After you get that order, then come to me. Immediately, don't go for a writ. Anyway, it depends from case to case, facts to facts, client to client. So therefore, this is what was happening under the old regime. Now, under the new regime, my dear friends, now what has happened here? Yeah. The second proviso was there. What was second proviso? The time limit contained in that first proviso will not apply to any case where any income in relation to any asset, including any financial interest in any entity located outside of India, has escaped assessment for any assessment year. Then the third proviso, very important. What was the third proviso? It gave the power to the assessing officer to assess or reassess such income other than the income involving matters which were subject matter of any appeal, reference or revision, which was chargeable to tax and has escaped assessment. There are no such provisos in this new section. Now there was explanation, etc. Yeah. So here only one explanation here now. If you see, there is only one explanation in the new regime 147 for the purpose of assessment or reassessment or recomputation. Recomputation is the new word added in this. Under this section, the assessing officer may assess or reassess the income in respect of any issue which has escaped assessment, and such issue comes to his notice subsequently in the course of proceedings under this section, irrespective of the fact that the provisions of 148A have not been complied with. So we'll go through in a little while. From now, we'll go through even 148A and we will discuss this. What basically is telling? Now, suppose, Mr. B.T. Shetty, he had a branch at Kerala. He had a head office at Bangalore. And it is BT Shetty Hardware Stores. So he also had a branch at Kerala, branch at Mysore, and head office at Bangalore. So it's a simple thing. Reasons recorded, it says branch at Kerala, income has escaped, assessment or concealment. Therefore, what it says, during the course of proceedings, it is found out that at the branch at Kerala, there is no undisclosed income. But actually, the undisclosed income is there at branch at Mysore. Concealment is there at branch at Mysore. But in the reasons recorded, it was branch at Kerala. So earlier, host of judgments were there, starting from Bombay High Court in Ranbaxy, Jet Airways, Delhi High Court, etc. Except that Karnataka High Court, Govindraju was against. Anyway, what was the dictum of those high courts? When you have not made addition on the reasons recorded, on the primary reasons recorded, you have no business, you have no right to make additions on the secondary reasons. Secondary, I mean your income noticed in the subsequent, in the course of reassessment proceedings. That was the dictum of high courts. Now what is he telling here? He is telling nothing doing. I may, I have reopened your case, but in the course of reassessment proceedings, if any other issue also comes to my notice subsequently in the course of proceedings, irrespective of the fact that provisions of 148 have not been complied with, I will make an addition. We will go through this. Now, there were explanation to deemed to be cases for income escaped assessment in the old provision. Nothing is there, sir, now. So we move forward now. Now, yeah. So that explanation to newly substituted 147. So what is this 147? Again, for your reference, new section. Very simple, sir. Any income chargeable to tax in case of an assessee escaped assessment for any year, assessing officer may, subject to provisions of 140 to 153, assess or reassess such income or recompute the loss or depreciation allowance or any other allowance or deduction for such assessment year. And for that, there is an explanation that the assessing officer can also assess or reassess the income in respect of any issue which has escaped assessment. But this issue comes to his knowledge, to his notice, subsequently in the course of reassessment proceedings, irrespective of the fact that provisions of 148A have not been complied with. Now, so earlier, this explanation to newly substituted 147, there was this conflict which we discussed. Even though explanation 3 to erstwhile 147 of the Act, which was introduced by Finance Act 2009 with retrospective effect from 1st of April 89. However, the judicial conflict continued on this issue even after introduction of explanation 3 to 147 with retrospective effect. So we discussed all these cases now. CIT was a Jet Airways, your Bombay High Court, wherein the High Court has emphatically held that for making any addition on any other issue, an adjustment on the main issue for which the assessment has been reopened should be made, has now been done away with because of that explanation. Now, so all these favorable rulings have now been done away with. Again, Bombay High Court in Black and Which, Pritchard, INC, Ranbaxy Laboratories Limited, Delhi High Court, your Calcutta High Court in Infinity Infotech Parks Limited, your Madras High Court in Martech Peripherals, Gujarat High Court in Mohammad Junaid Dadani. All these are now knocked off. And similarly, in the recent judgments, rendered in 2018 by Chennai Tribunal, where the assessing officer, where the Honorable Tribunal held that the assessing officer would be precluded from making any other addition towards a new source of income, prima facie is reason to believe that income had originally escaped assessment had failed. Now, yes, sir. But here, there were two against case laws. Yeah. Yeah. So this is Honorable Punjab and Haryana High Court in case of Majinder Singh Kang and Delhi High Court in Jacotia Classics. These two were against. So now these two have now been confirmed. So the requirement as laid down by favorable rulings that for making addition on any other issue, an adjustment on the main issue for which the assessment has been made should be made has now been dispensed with by virtue of explanation to newly substituted 147. We are clear. Now coming to 148. Not much amendment in the new 148. They have added that verse. What was it? before making assessment, reassessment, recompletion 147. Now the magic words are and subject to provisions of 148A. The assessing officer shall serve on the assessee a notice along with a copy of order passed if required under clause D of 148A. Then it is continuous, same, requiring him to furnish within such period as may be specified in the notice return of income or the income of any other person in respect of which is assessable under this act during the previous year, that is your clubbing provisions, etc. in the prescribed form, verifying the prescribed manner. And all the provisions of this act shall so far as may be, apply accordingly as if such return, where a return required to be furnished under section 139. So what are they telling? Before you are making assessment, reassessment, you subject to provisions of 148A. Assessing officer shall serve on the assessee a notice. So along with now 148. Now today, if you were to receive any 148 notice post 30th of June, before that controversies we will discuss in detail. Don't worry. Today, if you were to receive 148, you should get 148 notice. Along with 148 notice, you should get an order. What order? This is preliminary order, or you can say interlocutory order or intermediary order. It is not the final order under 148A clause B. So 148 plus you have to get order under 148A clause D. Today, if you are going to get notice under 148, we will discuss. Don't worry. Now, then nothing else is there. The subsection 2 was what? Assessing officer shall, before issuing any notice under this section, record his reasons for doing so under the old provision subsection 2. This now shifted to 148A. Now there are this proviso to 148. What is this? Host of approvals are there, my dear friends. It is not easy to issue 148 notice under the new regime. What is the government is telling? Legislature is telling you have to take a lot of approvals. There are a spate of approvals. There are a horde of approvals. There are numerous approvals. So I don't know whether the legislature has dug its own grave or it is the final nail in the coffin of the assessing officer. Every stage before issue of notice, take approval. For issue of notice, take approval. For making or conducting inquiry, take approval. Thereafter, for passing order, take approval. We will see. So everywhere what I have done, I have mentioned there, this is the first approval, these are the second approval, total number of approvals you will see. Now the first, proviso to this new 148, what it says, provided no notice under this section shall be issued unless there is information with the assessing officer which suggests that income chargeable to tax has escaped assessment in the case of assessee for the relevant assessment year, and assessing officer has obtained prior approval. Here comes the first approval. So you are telling you can't issue notice under 148. When can I issue notice under 148? Only if you have some information with the assessing officer which suggests that income chargeable tax escaped assessment. So what should be in the possession of the assessing officer? Information suggesting that income chargeable tax has escaped assessment should be in possession of assessing officer, and the learned assessing officer has to obtain the prior approval of the specified authority to issue such first notice. Very simple, sir. Now, what do you mean by the information with assessing officer suggesting income chargeable tax? We'll look into it. Then there are explanations. That was a proviso. This is one proviso, sir, to 148. Now there are explanation. Under explanation 1, they are giving the meaning of information itself. So for the purpose of this section in 148A, information with assessing officer which suggests that income chargeable tax escaped assessment means only two types of information now. First, you should have information in possession of assessing officer suggesting that income has escaped assessment. Then only you can issue notice on 148. So what are the types of information? It is given in explanation 1 itself. In explanation 1 under 1 and clause 2. Clause 1, clause 2. Only two types of information. What are the two types of information? The first information is any information which is flagged in accordance with RMS formulated by board from time to time, risk management strategy formulated by board from time to time. So assessing officer has no discretion now. The discretion of assessing officer is finished. So the board will formulate the risk management strategy time to time. What is the risk management strategy? Is it there in public domain? Nobody knows. What is your risk management strategy? What do you mean by risk management strategy? That information you're telling what will be flagged by in accordance with the risk management strategy formulated by board. That's all. So you want to know what is that RMS means? You have to go till the High Court. Please go till the High Court. Then the High Court, you approach the High Court, and there you can ask, sir, we want a copy of that RMS. Department is not going to share this RMS now. They are only telling any information flagged in case of assessee for relevant assessment year in accordance with RMS formulated by board from time to time. That is first information. Second information is what? Final objection raised by Comptroller and Auditor General of India to the effect that assessment in the case of assessee for relevant assessment year has not been made in accordance with the provisions of this Act. You have reversed, the Supreme Court judgment also. For example, there was this first was what? Information flagged in case of assessee in accordance with RMS formulated by board from time to time. Next is telling final objection raised by CAG. No, CAG is not even an authority under Income Tax Act, sir. CAG is not authority under 116 of the Income Tax Act. You are not even authority. And it is held in very well in this Indian and Eastern Newspaper Society versus CIT, rendered way back in 1979, Tax Sutra 5019, Supreme Court 1979. Telling what? That opinion of an internal audit party on the point of law cannot be regarded as information within the meaning of Section 147B, then prevailing, and consequently reassessment proceeding ought to be quashed. There, the Honorable Supreme Court also, went on to observe the role of internal audit committee, stating that whether it is an internal audit party of the Income Tax Department or an audit party of the C&AG, Comptroller and Auditor General, they perform essentially administrative or executive functions, and they cannot be attributed the power of judicial supervision over the quasi-judicial acts of the income tax authorities. And the Honorable Courts, Supreme Court, further distinguished between pronouncing the law. They are telling you are raising that final objection. You are no authority to pronounce the law. You just communicate the mistakes, communicate the errors of the assessing officer, communicate the mistakes. You cannot pronounce a law. You cannot form the law. Honorable Court further distinguished between pronouncing the law and its communication and observed that an audit party does not possess the power to so pronounce on the law. It nevertheless may draw the attention of ITO to it. Law is one thing, communication is another. It's given long back, sir. But now they are telling you are bringing back the concept of information. And, based on this case law, your Indian Eastern Newspaper Society, at least more than 360 case laws are there. More than 360 case laws in taxman itself. Go and search that 360 case laws being nullified today. So we will go through. So here first what? Any information flagged in the case of assessee for relevant assessment in accordance with RMS formulated by board from time to time. We'll find out what is the meaning, and also final objection raised by CAG. Stating what? To the effect that assessment in the case of an assessee, meaning what? Assessment is over, sir, in the case of assessee. Meaning 143 is passed, 144 is passed, or even 148 order would have been passed. To the effect that assessment has not been made in accordance with the provisions of this Act. So assessment is over here. Now explanation 2, there are 4 clauses. We will come to the later. What is explanation 2? For the purpose of the section, the search is initiated at 132 or books of accounts or other documents or assets requisition and 132A on and after 1st of April 21 in case of assessee, or survey conducted on 133A other than your TDS survey under 133A, or other than your ceremonial or marriage or event survey 133A5 in case of assessee, or the assessing officer is satisfied with prior approval of the PCIT or CIT that any money, bullion, jewelry or valuable article or thing seized or requisition under 132 or 132A in the case of any person on or after 1st day of April belongs to the assessee. Then fourth one is assessing officer satisfied with the prior approval of the principal commissioner or commissioner that any accounts or documents seized or requisition in the case of any person on or after 1st April 21 pertains to or pertain to any information or any information contained therein relate to the assessing. Then the assessing officer shall be deemed to have information. So these 4 clauses, my dear friend, there is deemed information. Earlier, that information consisting of 2 types of information. One is your risk management strategy formulated by board. It will flag. The system will flag. How the flagging is done? Based on RMS formulated by the board. Second is what? Final objection of CAG. That your assessment is not in accordance with the Income Tax Act. Fine. Then there is a concept of deemed information. Information, deemed information. What are the 4 types of deemed information? First is your search. Second is your survey. What is survey, sir? Other than your 133(2)A, that means TDS survey, and other than your ceremonial or event or expenditure survey, that is 133(a), 2A, I mean 5. Yeah, 133(a)(5), correct. Now, and the third one is telling where the assessing officer is satisfied that your 153C type cases, that were any money, bullion, jewelry, valuable article, thing, document, etc. seized, documents or evidence or account books seized or requisitioned in the case of any other person on or after 1st of April 2021 pertains to or pertain to or any information contained therein relates to your typically 153C cases. Then is telling this shall be concept of deemed information, and assessing officer shall be deemed to have information which suggests that income chargeable to tax has escaped assessment for 3 assessment years immediately preceding the assessment year, relevant to the year of search, relevant to the year in which search is initiated, or books of accounts, or documents, or assets are requisitioned, or surveys conducted, or money, bullion, jewelry, or valuable article or thing, or books of account, or document are seized or requisitioned in the case of any other person. That means what? If there is deemed information, automatically 3 years cases I'm going to reopen. Now please understand, even in case of survey, 3 years case will be reopened, sir. Search I have no problem. I am happy, sir. From 6 years you have reduced to 3 years. It can go beyond 3 years also. We will see when. But because of this deemed information, they are telling no problem. If there is a search, I am happy. You are telling only 3 years from the end of 11th assessment year, you can reopen. Fine, sir. But why survey? What harm have they done, sir? Survey? For survey also, you are going to reopen 3 years now. For survey also, you are going to reopen for 3 years now. Deemed information. For other 153C and search is okay. They are telling okay, in which the search is initiated, or books of accounts, or documents, or assets are requisitioned, or in the case of an assessee, money, bullion, jewelry, valuable article, thing, or books of account, documents are seized or requisitioned. Fine. So search it is 3 years, deemed information. Even in survey now, even poor the survey guys also have been caught in this new section now. Then explanation 3 is telling for purpose of the section specified authority means specified authority referred to in section 151. Now, what is first proviso to 148? We will go revise, don't worry. What is first proviso to 148? Notice can be issued by assessing officer only if the assessing officer has information in his possession suggesting that income chargeable to tax has escaped assessment. And again, assessing officer has to take prior approval of the specified authority. Fine. Now, what are the types of information? 2 types. Explanation 1, explanation 2. So explanation 1 and explanation 2 to 148, they are giving the meaning of information, deemed information. Explanation 1 is information, explanation 2 is deemed information. Explanation 1, 2 types of information, RMS strategy formulated by board, computer will flag, and final objection by CAG, and the deemed information in case of search, survey, etc. Fine, sir. Now, explanation 2 will apply only in cases of search, survey, or requisition of books or documents or other sets, whereas explanation 1, information that is normal information, will apply in all cases. Fine. Now, let us come to the meaning of information. Now, sir, you are discussing, telling that, explanation 1, suggesting income chargeable by escaped assessment, information flagged in accordance with RMS strategy formulated by board, or final objection raised by CAG, that the assessment has not been in accordance. Now, what is the meaning? What is risk management strategy? You see here, now, meaning of dictionary here, meaning of information as per dictionary. According to Oxford Dictionary, information means facts told, heard, or discovered about somebody or something. Law lexicon defines the term information as the act or process of informing, communication, or reception of knowledge. Similarly, Supreme Court in A. Raman and Company, 67 ITR 11, Supreme Court has held that expression information means instruction of knowledge or knowledge derived from an external source concerning facts or particulars, or as to law relating to matter bearing on assessment. Similarly, the Supreme Court in case of Maharaj Kumar Kamal Singh, rendered way back in 1959, 35 ITR at page 1, held that the word information includes information as to the true and correct state of law, and so would cover information as to relevant judicial decisions. Now, Which information can be flagged by CBDT? You are giving the meaning of information as per dictionary. You are giving me the meaning of information as per Supreme Court law. All fine. What is the sort of information that can be flagged by the Central Board of Direct Taxes as per the risk management strategy formulated by CBDT? So such flagging of information would largely be done by the computer-based system on basis of predefined algorithms which may not be made public. You want it, I told you, you have to go to the High Court. However, it's pertinent to know which information can be flagged. So the CBDT will do the risk analysis based on data gathered from various sources such as information about the specified financial transactions collected from various parties under 285BA, your statement of SFT, statement of financial transaction or reportable account, or information received from law enforcement agencies or your foreign countries, your FATCA, etc. Or it can be due to the retrospective amendment in law or subsequent court rulings or correct interpretation of a provision given by a board or for advance ruling. Based on such particulars, reassessment can be initiated by the assessing officer, provided such information is flagged in the RMS by CBDT. Nobody knows what is there in risk management strategy. The risk management strategy, what are they going to do? It is directly with the board. They are going to take all this information, dump it in that RMS, and they are going to tell the computer to flag it. The host of information, sir. Hoard of information is there. You share a 285BA, you know how many authorities. You are purchasing land, you are selling land. The sub-registrar is going to give you all the information. They have to file quarterly returns, you know. Any transaction for purchase or sale of more than say 30 lakhs, etc. Immediately information they have to file it to the authorities and 285BA sub-registrar. Similarly, your credit card payments, you know, more than 2 lakhs credit card institutions, they are filing. Similarly, purchase of mutual funds, bond, etc. They are also uploading. You know, similarly, your cash deposit in bank, cash withdrawal from bank, you know, your SB account, current account, 50 lakhs, 10 lakhs, etc. All this information is coming, boss. Lot of information. So there is, you know, so much information, and because of all these authorities, 285BA. That is why if you see in this year's, budget, the government is telling because of this artificial intelligence, I am now going to reduce the due date for revising the return by 3 months. So earlier, what was the due date now? Earlier, you know, long back 139.5, 1 year from the end of assessment year or before the completion of assessment, whichever is earlier. Then what happened? Before the end of assessment year only. Now they are telling within 3 months before the end of assessment year. Why? Because artificial intelligence. I have so much information now. I don't need time now. I can finish off the assessment also early. Even for intimation now, earlier what was the time limit under 143.1? 1 year from the end of financial year in which return is filed, reduced to 9 months from the end of the year in which return is filed now. Similarly, in case of 143.3, earlier 1967, before 1967, my experienced professional friends would remember that time. What was the time limit for passing an assessment order, my dear friend? 4 years. It is now vacillating between what now? 21 months, 18 months, 15 months, 12 months, 9 months. So now they are telling after 31st of December, there is no working chartered accountant office because you can't file the return unless dates are extended. That is different matter. But you can't file a return beyond 31st of December. You can't file a reverse return beyond 31st of December. Even your scrutiny assessment due date is over by 31st of December. So a person indulging only in tax practice, what will you do after 31st of December? Start the tax audit, start the tax audit for the next year's 1st January. 3 months, nothing doing. Unless your due dates will be extended because of this pandemic, that is different. Anyway, so what the government is telling, very, very clever, sir. Reason to believe, fertile area of litigation. Now what is there? I don't know. I have not recorded the reasons. Why did you reopen my assessment? Based on information in possession of assessing officer suggesting that income has escaped assessment. What is the type of information? 2 types of information. First one is what? RMS risk management strategy formulated by Central Board of Direct Taxes, based on which flagging is done by the system. I don't know. What is the second situation? Final objection raised by Comptroller and Auditor General of India that the assessment you have made is not in accordance with the Income Tax Act. Matrix. No question of reason to believe. And in that RMS, it may be like a stock exchange, like a stock market. Every day, they'll be feeding the data. Daily it may increase, weekly it may increase, weekly it may change, daily it may change, quarterly it may change every month, it may change once in 15 days, I don't know. A lot of information will be fed in this system. Today also, this portal anyway, now it's under development, but before this hitherto, in the portal, all this information were there already, your high value transaction, your compliances, etc. And what all income you have, income from business, for example, export sales is 300 crores. It used to come information, other sources, this is the income, capital gains, this is the income. Even dividend details are coming now. Dividend, these are the details. The TDS is also may be done, TDS may not be done. Even other sources, FD interest. So, a lot of information is there even in your Form 26 because of this 285 BA. Or they are telling information received from law enforcement agencies or even foreign countries. A lot of claims should have received FATCA, based on that. And then, retrospective amendment law, etc. Subsequent court rulings or correct interpretation of provision given by court for advance ruling. Now, even that is abolished. Now, instead of your advance ruling, what is there? Bar. Anyway. So, that also goes now. So, based on these particulars, reassessment can be initiated by the AO provided such information is flagged in the RMS by CBDT. Assessing officer going to, I don't know. That is based on the flagging done by the computer system. Now, long back Supreme Court held in the case of Parshuram Pottery in 1977, 106 ITR page 1, that there must be a finality on legal proceedings and reopening is not possible unless a case falls strictly within the four corners of the law, providing for reopening of an assessment. That means what the court is telling, there's a difference between power to review and power to reassess. The assessing officer has no power to review. He has the power to reassess. And the reassessment has to be based on fulfillment of certain preconditions. CBDT will accordingly frame the RMS considering that there should not be any arbitrary information based on which reassessment proceedings are initiated by assessing officer. But who knows? That's $1 million question. What will be fed in the system? What will come out of the system? Anyway. Linkage with actual escapement of income, all this will stay. Information flagged in taxpayer's case for relevant assessment in accordance with RMS formulated from time to time should also have linkage with actual escapement of income as held in the old regime. Now, RMS being an internal document of the department, it would be, very difficult for the taxpayer to understand the criteria basis which the information is flagged. It may change on year-to-year basis, thereby would like uniformity, consistency. We discussed that. It may change even daily. Now, your final objection raised by the CAG that assessment has not been made in accordance with the provisions of the Act. So, as per this new provision, income shall be deemed to have escaped assessment. If any final objection raised by the CAG to the effect that assessment has not been made as per the provisions of the Income Tax Act. Now, my professional colleagues, all of you are going to department, all the experienced professionals, used to go to the department after the order is passed, there was the IAP, there is the RAP, etc. So, all this, they used to come, they used to check the file of assessing officer. They are going to tell, see, ATC proof is not kept in the file those days. ATC proof not kept in the file. ATD mediclaim, your donation is there, ATG. Some creditors confirmation not taken. In your 26 years, you are showing property purchase 10 crores. What is the source for purchase? 194A, any purchase of property, 194IA, any purchase of property beyond 50 lakhs, that 1% TDS you have to deduct. Department is not interested in that 1% TDS, my dear friend. They want to know what is that purchase of property, where is the source? And they want to check 50CA and 43CA in case of a developer held a stock in trade 43CA, and in case of capital asset, in case of a seller. And whether it has suffered capital gain tax, they are not paying that 1%. Similarly, 194Q TDS on purchases and last year 206C 1H, 1% on sales, that is on receipt, and this is on purchases. Are they interested in that 1%? Absolutely not, sir. They are not interested in 1%. They want to see whether these purchases and sales, etc., whether net profit you have paid tax or not, that's all. Whether that income is declared or not, whether the assessee has filed return of income or not. Anyway, so all this information is there. So here, what are they telling now? Also, I told you already, CAG is not enlisted as an authority in 116 of the Act. And prior assessment is mandatory, and some issue has not been visited by AO during original proceedings, and the C&AG feels same may lead to escapement of income. Now, that settled law, that final objection of CAG is not law, is now unsettled. So, we discussed that Indian and Eastern Newspaper Society, what was it? Earlier, what is this explanation one, your 148 telling, deems a final objection raised by CAG to be information. Now, why we are discussing this? Because final objection raised by CAG is an information. If it becomes an information, then if it leads to escapement of income, you can reopen the case, subject to your approval. Now the department will be well within its right to deem final objection raised by CAG, pointing out under assessment in a case to be information, even though this deeming is inconsistent with the judgment of Honorable Supreme Court. of Indian and Eastern Newspaper Society versus CA 1979, 2 Taxman 197 Supreme Court. Now, in terms of the Supreme Court judgment, such final objection by CAG on the material on record already considered by AO. Please understand, already on record considered by AO could not, cannot, under any circumstances, could be considered as information in accordance with the said judgment. But now, this has been revoked because of the amendment made to the Act. That means what we were arguing, Supreme Court was telling, it was a change of opinion. Only because such a change of opinion could not entitle the AO to reopen the assessment. Also, even more significantly, since the audit machinery does not at any stage, that IAP, RAP, etc., did not give the assessee an opportunity of being heard before deciding to make objection final, making such an objection the basis for reopening an assessment is also ultra vires the equality enshrined in Article 14 of the Constitution. So, Supreme Court went on to say this. Audit has no power of judicial supervision, whether it is the internal party of the Income Tax Department or the audit party of the C and AG. They perform essentially administrative or executive functions and cannot be attributed the power of judicial supervision over quasi-judicial acts of the income tax authorities. Neither the Income Tax Act nor the CAG Act supports the conclusion that an audit party can pronounce on the law and that such pronouncement amounts to information within the meaning of 147B of the Act. Now, anyway, but the court went on to tell, although an audit party does not possess the power to so pronounce on the law, it nevertheless may draw the attention of the ITO to it. Law is one thing and its communication is another. So, the knowledge or awareness of law may be communicated by anyone. No authority is required for this purpose. While the law may be enacted or laid down only by a person or body in authority in this behalf, the knowledge or awareness of the law may be communicated by anyone. Anyway. So, now what has happened now? This has been overturned. Similarly, held in Larsen and Toubro versus State of Jharkhand 2017 Supreme Court decision. It has a settled law that initiation of reassessment proceedings only based on audit objection, be it an internal audit of the department or of the CAG, legally invalid. If the AO disagrees with the information or objection of the audit party and is not personally satisfied that the income has escaped assessment, but still reopens the assessment on the direction issued by the audit party, reassessment proceedings are without jurisdiction. Clear-cut judgment by L&T versus State of Jharkhand, 79taxman.com. Similarly, in FIS Global Business Solutions India 2019, 104taxman.com, 169 Supreme Court dismissed an SLP against the decision of Delhi High Court that the audit objection being only information, reassessment notice based on said audit objection is not sustainable. Since the audit report merely gives an opinion and does not give any fresh or new material before the assessing officer, reopening of assessment merely on the basis of audit objection could not be sustained. Anyway, it would have been much better and much more legitimate to instruct the authorities to consider objections of CAG as having only persuasive value, and at best it should mark only beginning of the detailed inquiry investigation. However, such an inclusion as deemed information has now nullified the impact of above ruling, and AO can reassess concluded assessment based upon final objection of C and AG. We move further, sir. Now your deemed information. Now explanation 2, there are 4 types of deemed information. If there is deemed information, what is the end result? If there is deemed information, what is the end result? I can reopen the case for 3 assessment years, immediately preceding the assessment year, relevant to the previous year, in which search is initiated, or books of account, or other documents, or any other assets are requisitioned, or money, bullion, jewelry, or other valuable article or thing, or books of account or documents are seized or requisitioned in the case of any such person. Even in the case of survey, my dear friends, survey or search or requisition under 132A, 132, requisition of assets on 132A, or survey, what is the cutoff date? All after 1st of April 2021. Then deemed for how many years? You are telling me, yes sir, it is deemed information, which suggests that income chargeable for banks has escaped assessment for how many years? 3 years immediately preceding the assessment year, relevant to the previous year, in which search is initiated, or books of accounts, other documents, or any assets are requisitioned, or survey is conducted, or money, bullion, jewelry, valuable article or thing or books of accounts and documents are seized or requisition in case of any other person, your 153C type cases. 153 ABC now merged into this new reassessment only. Sections are deleted from the statutes, are 153 ABCD. Excepting what? Your 132 is still there. Whereas this procedural provision 153 ABC is now deleted from the statute. Now comes 148A. What is 148A now? You know that 148 notice can be issued subject to 148A. So what is 148A? Clause 37 of your explanatory memorandum. Heading is what for 148A? Conducting inquiry, providing opportunity before issue of notice under section 148. Now, (148A). Assessing officer shall, before issuing any notice under 148A, first is A, conduct any inquiry if required with the prior approval of specified authority with respect to information which suggests that income chargeable to tax has escaped assessment. This is not fourth approval. What I am telling is in this entire scheme of reassessment, wherever approval is required, I have marked that in my PPT. This is the first, second, third, fourth. So what is the A telling? Conduct any inquiry with the prior approval of specified authority with respect to information which suggests that income chargeable to tax escaped assessment. B, provide an opportunity of being heard to the assessee with the prior approval of authority by serving upon him a notice to show cause within such time as may be specified in the notice, being not less than 7 days, but not exceeding 30 days from the date on which such notice is issued, or such time as may be extended by him on the basis of an application in his behalf, as to why a notice under 148 should not be issued on the basis of the information. And then consider the reply of the assessee furnished. And D is telling, decide on the basis of material available on record, including reply of the assessee, whether or not it is a fit case to issue a notice under section 148 by passing an order with the prior approval of specified authority within 1 month from the end of the month in which the reply referred to in clause C is received by him, or where no such reply is furnished within 1 month from the end of the month in which the time or extended time allowed to furnish a reply as per clause B expires. What is there? Provisions of GK and Drive SAP, judge-made law, jurisdiction has now been inbuilt in the Income Tax Act. What it says, hey, assessing officer, you want to issue notice under 148? Fine, you follow the dictum of 148A. For every notice issued on or after 1st of April 21, you should mandatorily follow the dictum of 148A. What is it? Even before issue of notice under 148, you conduct any inquiry is telling with the prior approval of specified authority with respect to information which suggests that income chargeable to taxes escaped assessment. Then it's telling, give an opportunity of being heard to the assessee, again with the approval of specified authority, and give him some time. How much time? Minimum 7 days time to reply, maximum 30 days time to reply. He has not replied within 30 days, no problem. If there is an application by the assessee requesting for some more time, please give him some more time. And thereafter, assessee will furnish his reply. So please consider the reply. Please go through the reply. Based on the reply and based on the material available on record, now you please decide whether this is a fit case to issue notice under 148 by passing order under 148A clause D. And what is the time limit to pass this order? I told you this is not the final assessment order. It is a preliminary order. It is an intermediary order. It is an interlocutory order. What is this order passed for? Only to issue notice. Nothing, nothing can be more, what can I say? This is justice. The legislature is, this section is telling, I am going to give you justice. Even before I issue notice on 148, I will do all the inquiries. I'll give you an opportunity of being heard. I'll consider your reply. Then I will pass an order. I'll give you time also to furnish reply. Minimum 7 days, maximum 30 days. You may also give me an application requesting me to extend time. I will give you even extension of time. Thereafter, I will pass an order within 1 month from the end of the month in which reply is furnished, or within 1 month from the end of the month in which time or extended time to furnish that reply expires. I will pass an order 148A clause D. saying what? That this is a fit case for issue of notice under 148 or not a fit case for issue of notice under 148. So very welcome, Honorable Sir. In my 25 years of practice as an article as well as chartered accountant, I haven't seen once the notice under 148 is issued. Invariably, department will, pass the order. There is no, till today I have not seen a single case where they will tell no, reassessment proceedings are dropped. 148 proceedings are never dropped. But now they are telling even before I issue the notice, that too with prior approvals at each step, specified approvals, hold of approvals, state of approvals at each step. Next. But understand very carefully. Proviso says 148A, provided provisions of the section shall not apply in a case where search is initiated on 132 or books of accounts or other documents or assets are requisitioned under this section on or 1st of April 21, or the assessing officer is satisfied with the prior approval of the principal commissioner or commissioner that any money, bullion, jewelry or valuable article or thing seized in search or any books of accounts, documents seized in search under 132 or requisition under 132A, they pertain to or any information contained therein relate to the assessee or 153C type cases. That means in case of these, that is your search, survey, etc., your search basically 132, 132A or a 153C type cases, I am not going to conduct any inquiry. I am not going to give you opportunity of being heard. I am not going to conduct any inquiry. I am not going to pass an order 148A clause D. So here, because there is deemed information, I told you, for the deemed information, more than, up to 3 years, you can reopen. So here also is telling 148A provision will not apply. I am not going to give you an opportunity of being heard. Straight away, I will reopen. Straight away, I will issue notice on 148. I am not going to send 148 notice along with order in 148A clause D. In what type of cases? In all these cases, sir. A, B, and C. A is what? Your search under 132 or books of accounts or other documents or asset requisition 132A, or the assessing officer is satisfied with prior approval of the principal commissioner or commissioner that money, bullion, jewelry or valuable article or thing seized in search or requisition 132A, or any books of accounts or documents seized under 132 or again requisition 132A on or after 1st of April 21 pertains to, relates to, or any information contained therein to the assessee. So specified authority means specified authority referred to in section 151. Nowhere it is talking about survey. So for survey, you have to follow 148A. You have to pass 148A-D also. But there what it's telling, even for survey, other than 133-2A or TDS survey, or 133A5, 133-2A or 133A subsection 5, that is for your ceremonial survey, event survey or marriage survey, for that expenses, etc. There also will be deemed information. Anyway, now, so even that faceless procedure is also there under 148A. Yeah. Yes. If you see the new procedure under 148A, faceless process, I see, I am not, this faceless assessment, if you tell, my view is, where is it faceless? It may only be contactless. How is it faceless? You are allowing me a principle, you are giving me an opportunity, video conferencing, you can see me, I cannot see you, but you can see me. How is it faceless? You know who I am. I may be chartered accountant. The other side person, I may be the chartered accountant, or assessee, may represent on his own, etc. Anyway. So 148A, AO may conduct inquiry if required and issue show cause notice with specified authorities prior approval. Many CS are asking me, sir, the section is telling if required. AO may conduct inquiry if required, sir. If required means what? It is only non-search cases, sir. It is not in such cases. In such cases, there is no question of giving an opportunity of being heard and following the process laid down in section 148A. So if conduct any inquiry if required means has to be strictly read as what? Non-search cases only. In such cases, no question for following the provisions of 148A. So AO may conduct inquiry if required and issue show cause notice with your specified authorities prior approval. Reply by taxpayer within 7 to 30 days. I told you minimum 7 days, maximum 30 days. Opportunity to taxpayer to be given with specified authorities prior approval of such time as may be extended by him on the basis of an application in his behalf. So now, can you issue notice under last date? Can the learned assessing officer issue notice under 148 on the last date? 31st March you receive notice. 30th March you are receiving notice. Sir, this process, minimum 7 days time you have to give me. Maximum 30 days time you have to give me. Or on behalf of request by assessing or by your assessee for extending the time limit also, more time may be allowed. Then you have to give me 1 month from the end of the month in which such information is received, or 1 month from the end of the month in which the time limit expires. Give me time to pass order 148 clause D and then serve that order under 148 clause D along with notice under 148. So the assessing officer has to start this process in January end only, at least. At least in January end, he should start this process. He can't now issue notice on the last date anyway. So AO to pass order 148 AD with specified authorities prior approval within 1 month from the end of the month in which taxpayer replied, or if it does not reply, expiry of time allowed to taxpayer. AO decides to reopen. No means proceedings closed. Yes means issue notice for reopening and then new time for reopening. That is whether AO has in his possession books of accounts or other documents, evidence, and B, income escaped assessment represented in the form of asset. So here it is. Yeah. Yes. So issue notice for 148A with new time for reopening is whether AO has in his possession books of accounts, other documents, evidence, income escaped assessment represented in the form of asset, and income is greater than INR 50 lakhs for such year. Yes, AO can reopen for past 10 years. No, can reopen only for 3 years. So again, we will go through this. Please see this. 148. Yes. So if you see this now, 140, we will come to that 149, it is there. So up to 3 years, there is no problem. Beyond 3 years is telling, if you want to reopen a case beyond 3 years, but up to 10 years, then the minimum amount of income that should have escaped assessment for each year beyond 3 years up to 10 years is rupees 50 lakhs. And that 50 lakhs should be represented by only an asset. So then therefore AO can reopen for past 10 years. Each year it should be more than 50 lakhs. We will discuss, don't worry. Next. Then the aforesaid procedure is invalid and mandatory and notice issued without following the aforesaid procedure is invalid except in the following cases. Search initiated on 132 or books of account or tax authority satisfied money, bullion, jewelry, or tax authority satisfied books of accounts or documents, etc. So deem the tax authority as information suggesting income has escaped assessment for past 3 years. So 148A is telling in these 3 cases you need not follow the procedure of 148. Now 149. What is 149, my dear friends? Time limits. So earlier we discussed 4 years and beyond 4 years up to 6 years, beyond 6 years up to 16 years. Now what are they telling? Very important. They are telling I want to reduce litigation. I want to provide a benefit to the taxpayer. I want to end the harassment. So it is only 3 years. That 6 years is substituted by 3 years. And also I can go beyond 3 years but up to 10 years. When? Unless the assessing officer has in his possession books of accounts or other documents or evidence in the form of asset which has escaped assessment and which amounts or likely to amount to 50 lakh rupees or more for that year. Please understand. Then they are telling 4 provisos are there. What is the first proviso? We will go through and then we will try to offer our views. First proviso to 149. Provided no notice under 148 shall be issued in a case beginning on or before 1st of day of 2021. If such notice could not have been issued at that time on account of being beyond the time limit specified under provisions of clause B of subsection 1 of the section as they stood immediately before the commencement of Finance Act 2021. We will see, don't worry. Second proviso. Provided further provisions of the subsection shall not apply in a case where notice under 153A C read with A required to be issued in relation to search initiated 132 or books of accounts and documents any assets requisition 132A on or before 31st day of March 21. Third proviso, provided that for computing period of limitation, the time or extended time during which the proceeding under 140 days is stayed by an order or injunction of any court shall be excluded. Fourth proviso is telling, provided also where immediately after exclusion of the period referred to in immediately preceding proviso, period of limitation available to the AO for passing an order 148 AD less than 7 days. Such remaining period shall be extended to 7 days, and the period of limitation in subsection 1 shall be deemed to be extended accordingly. Now, then explanation. For the purpose of clause B of this subsection, assets shall include immobile property, land or building, or both shares and securities, loans and advances, deposits in bank account. And subsection 2 is telling provisions of subsection 1 as to the issue of notice shall be subject to provisions of 151. Very good. What is the section, sir? Up to 3 years, no problem, sir. No notice and 148 shall be issued for relevant assessment year. 3 years have elapsed from the end of relevant assessment year unless the case falls under B. So up to 3 years I can issue. If you want to issue notice beyond 3 years, up to 10 years, is telling assessing officer should have in his possession books of accounts or document or evidence which reveal that the income chargeable to tax represented in the form of asset which has escaped assessment amounts to or likely to amount to 50 lakh rupees or more for the year. I do not know the reason for the magnanimity in the heart of the legislature. You are telling me for a period beyond 3 years, if I want to reopen, and up to 10 years, that undisclosed income should represent only asset. And that too, asset is defined in inclusive manner to include only 4 types of assets. That undisclosed income should represent an asset, and that should be more than 50 lakhs. And the meaning of that asset is given in explanation stating that asset shall include immobile property being land or building or both, shares and securities, loans and advances, deposits in bank account. 4 types of assets. What if it's a cash in hand, sir? What if it's jewelry? Anyway, that is an inclusive definition. Simpliciter, cash simpliciter, jewelry simpliciter, etc. But you are telling me should represent only asset? Meaning to say, now it is beyond 3 years and up to 10 years. So say, Rishi is searched. If Rishi is searched, then in the 4th year, 5th year, etc., every year, in this jewelry is there. Jewelry, 30 lakhs rupees only in locker. You can't touch him. Cash kept 20 lakh rupees. You can't touch him. Artifacts, paintings, 30 lakh rupees. So every year, that too, it's every year, undisclosed asset. Income representing in the form of undisclosed asset for every year should be less than 50 lakhs. Then you can't reopen. Or if it's more than 50 lakhs, then only you can reopen. And the two that asset should be 4 types of assets, but it's an inclusive definition. So I do not know the change of, I told you the magnanimity in the heart of the legislature, but be that as it may. Suppose in the locker now 30 lakhs is there, they can't touch you. It is beyond 3 years, means undisclosed income representing an asset. What about creditors, sir? It is not an asset, it is creditors. Say, for example, 43B is there. 43B. Can you make addition based on 43B? No. Does it represent an asset? Say, for example, 40IA, TDS remitted, TDS deducted, not remitted, etc. 40IA, TDS not deducted, not remitted, etc., etc. Can you make an addition 40IA? No. Does it represent undisclosed asset? Take, for example, 40A3. Does it represent an asset? Cash payments in excess of 10,000. Take, for example, 269 SS, 269D, violation which will invite penalty under 271D, 271E, 100% of such transaction. Can you make an addition? No. Where is the asset, sir? Where is the asset? You are telling me undisclosed income should be represented in the form of an asset, and that too should be more than 50 lakhs. Change of heart. Magnanimous. Magnanimity on the part of legislature. So who am I to argue? Anyhow. So do not worry. Up to 30 lakhs cash is there. Happily you declare. Yes, I have not declared. I have not declared. That asset also, my dear friend. That asset, undisclosed asset, income representing asset. 69A. 69A. Matters. Because it is an asset. That will naturally attract 115 BB, 60% tax plus 25% surcharge, 60 plus 15, 75. 4% health and education says 79%. 10% penalty, 271 EAC. Then 10% of tax, 60 into 10, 6. In case of a search, where have you made amendments, sir? 271 AAB, income declared, income admitted, sworn statement, 132.4, substantiated, 30%, 60%, etc. That section is left untouched. There is a professional opportunity in all these sections, my dear friends. And everything will go to High Court, don't worry. Everything will go to High Court. And so for you, the institute has recently made your amendment. No, your advocate also can become a partner. Your company secretary can also become a partner. Now the time has come. Anyway, so this is sum and substance. This is 149. We'll have to wait how the court answers. And that too, that asset, on which day are you going to see, sir? 4th year, 5th year, 6th year, that asset is now what has happened? For example, Rishi purchased the site. Site worth 1 crore in 2017. 2017 purchased site for 1 crore. 2018 sold that site, deposited that money in the bank. 2021 he went on a foreign trip. He went on a foreign trip with his wife Bindu and he went to Europe. He spent that 1 crore rupees. So which year? Which year? What time? What is the time? Which year? That undisclosed asset. Which year should I take and should I add, sir? All these should be answered by the courts. We have no definitive answers. Anyway, there are 4 provisos to 149 and very simple provisos. What are they telling? First proviso is telling no notice on 148 on or before 1st day of April if such notice could not have been issued at that time on account of being beyond the time limit specified under the Act as they should immediately. Fine. What could not have been then? Also now you cannot do it. So what is that example? We will see that. Now, yes, first proviso to 149.1. For example, Mr. Hay has undisclosed income of 10 crores for assessment year 12-13. Under the existing provisions, notice for reopening could have been issued up to 31st of March 2019. Under the new scheme of assessment, notice can be issued up to 10 years where the income escaping assessment is 50 lakhs or more. So under the new provision, such notice could have been issued up to 31st March 2023. However, due to first proviso to section 149.1, notice under 148 cannot be issued since the time limit of 6 years as prescribed under the existing provision is already expired. Again, second proviso to 149.1. What are they telling? Where the search, etc. is your requisition of books under 132A, search under 132, etc. is made before 130. Is made before 31st of March. Then the assessment or reassessment computation shall be continued as per the existing provision of 153 ABCD. And aforesaid time limitation shall not apply to such cases. That new time limit will not apply. Why? Search is conducted before 31st of March. Fair enough. What is third and fourth proviso? To compute period of limitation for issuance of notice under new section 148, time or extended time allowed to the assessee in providing an opportunity of being heard or period during which such proceedings before issuance of notice under section 148 are stayed by an order or injunction of any court shall be excluded. Fair enough. It was also there in the earlier provisions. You are putting a writ and court has given a stay now. So that period of stay will not be included in passing, determining the time for passing this order. If after excluding such period, the time available to the assessing officer for passing such an order under 148A clause D about the fitness of a case for the issue of notice on 148 less than 7 days, then the remaining time shall be extended to 7 days. Now, first proviso to 149.1B deals with reassessment of assessment year 21-22 and earlier years. So amended provision shall apply to all reassessments taking place after 1st of April 21. No problem. In the case of assessment years prior to 2021, if the same could not have been reopened as on particular date as being beyond 6 years under the erstwhile section 149(1)(b, then the same cannot be reopened under the amended, substituted new section 149(1)(b. What could not have been done then also cannot be done now. Therefore, assessment year 14-15 would become time barred as on 31st of March 21 under the erstwhile section 149(1)(b. All years prior to and including assessment year 14-15 cannot be reopened under the new provisions, though it will fall within the extended time limit of 10 years. However, if a notice could not have been issued as on 31st March 21 as a result of first proviso to existing 147, in the absence of any failure on part of the assessee to disclose fully and truly all material facts, etc., same can still be reopened if the provisions of amended, substituted new section 149(1)(b) are satisfied. That is your 10 years. Not time barred under 149(1)(c) since foreign assets still time barred under the new provision. Anyway, I told you it is shifted to the your UFI undisclosed foreign income and assets. Now 151. This is the substitution for new section for 151. 150 there is no change, so we are not discussing. The sanction for issue of notice 151 is specified authority for purposes of 148 and 148A shall be the principal commissioner or principal director or commissioner or director if 3 years or less than 3 years have elapsed from the end of relevant assessment. There is no more easy. Even for 3 years and beyond 3 years, up to 3 years, you need to take the permission of honorable principal commissioner, honorable principal director, or where they are not available, the commissioner or director. And you want to go beyond 3 years for reopening, the assessing officer will have to take the sanction, will have to take the approval from the honorable principal chief commissioner or honorable principal director general, or where there is no principal chief commissioner or no principal director, from the chief commissioner or director general. So now it is not easy to reopen. You'll have to go to the highest authority in the income tax office. Now, so this is what in order to avoid misuse of the extended period of reassessment, sanctioning power has been given to principal CCIT or principal director general of income tax, one of the highest in the authoritative hierarchy. What is the existing provision, sir? You know that beyond 4 years, principal CC or CCIT or PCIT or CIT, up to 4 years JCIT. Whereas under the amended provisions, beyond 3 years, principal CCIT or principal DGIT, where such officers are not deputed CCIT or DGIT, up to 3 years it is PCIT or principal DIT or CIT or DIT, where PCIT or principal DIT not available. Now, earlier 151 used the word satisfied. The word satisfied has now been replaced by the word. Yes. Please see this. Unless the principal chief commissioner or principal or the chief commissioner is satisfied on the reasons recorded. Now, sanction for issue of notice for specified authority for 148 and 148A. No different mechanical satisfaction or non-application of fine by authority would not be sufficient. Further sanction approval of an authority in place of another authority would not be valid beyond 3 years. Those continue, sir. You have taken the permission of a superior authority. We used to argue. Then we used to say the learned assessing officer has no jurisdiction. You should have taken the permission of JCIT, but you went and took the permission of CCIT. Fine. Courts have given, you have no chance, there is no jurisdiction to reopen. Why? Because you cannot take an sanction of a superior authority when the law is not mandating the same. Because this is a different authority than mandated by law, than mandated by 151 of the Act. Anyway, this 151A is in case of faceless assessment of income escaping assessment. Next. Now the time limit for completion of assessment reopened under 148. So under 153 to 153(1), time limit for framing assessment under 143 or 144, etc. Under 153(2), that order of reassessment, time limit for passing order of reassessment. Under 147, order is passed. The time limit is given 153 subsection 2. What is the time limit? 9 months from the end of financial year in which notice under 148 is issued. However, the time limit to issue notice under 148 is subject to provision of 149. For example, if a search is conducted on 1st of April 2021, search. Reopening of 3 years will be automatic and therefore there shall be deemed escapement of income for assessment year 1920, 2021, 21-22. However, to cover assessment year 1920, notice under section 148 needs to be issued on or before 31st of March 22. Similar condition applies to reopen any of the preceding 10 years assessment, 10 years relevant to the year in which such surveillance seizure is conducted. Time limit will be extended to 12 months if reference is made to the TPO. So this 153, it is deleted. On or before 31st March 21 only applicable, thereafter deleted. Similarly, 153C deleted. Now, so procedure of reassessment under the new section, new jurisdictional requirements, information with the assessing officer suggesting that income chargeable tax escaped assessment, prior approval of the specified authority at various stages, information flagged with RMS formulated by the board, final objection raised by C and AG that the assessment in case of assessee for the relevant assessment year has not been made in accordance with the provisions of this act. Inquiry opportunity of being heard and order under section 148A. Then third party in case of search, your usual satisfaction and prior approval. Then conditions for extended time limit of 10 years under 149(1)(b). Many jurisdiction requirements are there, your possession, revealing escapement, your documents, evidence, possession, etc. More than 50 lakhs in the form of an asset. My good friend Divya will ask me, sir, you are telling you want to reopen assessment beyond 3 years up to 10 years. Listen carefully. Beyond 3 years up to 10 years you want to reopen. How many years shall I maintain the books of accounts under the Act 44A Rule 6F? He is entitled to this question, absolutely. How many years should I maintain the books of accounts? You are telling me, standing today, you reopen cases for 10 years, fine. Starting from 11-12, I can reopen. I am in assessment year 21-22. Last 10 years cases can be reopened if I fulfill the provision, mainly what? Undisclosed income exceeding 50 lakhs or likely to exceed 50 lakhs represented by asset for each year. Why 11-12, sir? We are in assessment year 21-22 now. 10 years. 20, 21, 19, 20, 18, 19, 17, 18, 16, 17, 15, 16, 14, 15, 13, 14, 12, 13, 11, 12. But then law is mandating what? For a professional only. Rule 6F is only for professional. What about non-professionals or non-business? Business people. Non-professional business people. Where does it say? Act only says you need to maintain such books of account from which income can be, from which the assessing officer can deduce the income there. So there again, there will be litigation again, anywhere. And then taxpayers charter is also there. So here if you see now, illustrative table for last dates. So income escaping, we have given the table, time limits if you notice can be issued up to 3 years. Time limits if notice can be issued up to 10 years. So that you can go through, no problem. Now, what is the comparison between the new scheme and old scheme? And then we will go to the question. What is the main question? Whether all the notices issued on or after 1st of April 21 and before 30th of June are valid or not valid. This is the difference between the old scheme and new scheme. Now, yes. So this is the question for which we are all attending this session and waiting for this time. Whether notices issued after 31st of March 2021 is under the old law or the new law and whether it is valid. Fine, sir. There was a pandemic. March 20, I told you there was a pandemic. Pandemic is for me, pandemic is for you, pandemic is for everyone, all over the world, not only India. So therefore, the government relaxed all the timelines. They brought in this ordinance, ROLA. They brought in this ordinance, that is TOLA, taxation and other laws, relaxation of certain provisions, ordinance 2020. 31st of March, they brought in an ordinance. the taxation, other laws, relaxation of certain ordinance 2020. What was the due date expiring on 31st March 20? Extended to 30th of June 20. So that is assessment year 13-14, assessment year 14-15. Assessment year 13-14 was the due date, sir? March 20. So therefore, the government extended the 13-14 assessment year. So due date of expiring March 20th, extended to 30th June 20. Fine. 24th of June, that notification has come, 35/20. What was the due date expiring on the 31st March 20? Extended to 31st of March 21. Then ordinance cannot stay for more than 6 months. It has to become an act. So as and when the Lok Sabha, the Parliament again, when the Parliament is in session and not in session, Parliament comes back in session, then the ordinance can't go beyond 6 months. Therefore, when the Parliament back in session, that 6 months and within 6 weeks it has to become an act. So within 6 months it became an act. 29th of 9, this TOLA, Taxation and Other Laws Relaxation Amendment of Certain Provisions Act 2020 came into force. Ordinance became an act. In that ordinance, there is section 3(1)(a). In that ordinance, 3(1)(a). 3(1)(a) in that ordinance, in the act. Ordinance has now become an act. Taxation and Other Laws Relaxation and Amendment of Certain Provisions Act 2020, section 3(1). Where any time limit has been specified in or prescribed or notified under specified act, which falls during the period from 20th day of March 20 to 31st day of December 20, and such other date after 31st day of 20 as the central government may by notification specify in this behalf, they knew that they are going to extend further for completion or compliance such action as A. 3(1)(a), very, very important. What is the power you are getting by this notification? 3(1)(a), this act is giving you this power. Issuance of any notice, intimation, notification, sanction, approval, or such other action by whatever name called, by any authority, commission, or tribunal, whatever name called, under the provisions of specified act. And where completion or compliance of such action has not been made within such time, then the time limit for completion or compliance of such action shall, notwithstanding anything contained in the specified act, stand extended to 31st day of March 2021 or any other such date after 31st day of March 21 as the central government may by notification specify in this behalf. Okay, we have no problem. You are extending the timelines. You are within your power to do so. I have no problem. I am not contesting. Now, 29/10/2020, this notification number 88/2020 issued under 3(1) of the Taxation and Other Laws. Your relaxation amendment of certain provisions Act 2020 for extension of due date for return filing, return of income. Okay. Again, 31/12 notification 93/20 issued under section 3(1) of the TOLA for all notices to be issued up to 30th March 21, extended up to 31st March 21. Now the problem starts. 28th of March Finance Act is passed. 28th of March 21 Finance Act is passed, meaning to say the old 147, 148, 149, 151 deleted, substituted with new provisions of 147, 148, 159, 151. 28th March Finance Act is passed. Old provisions are no more in force. Now what you did on 31st of March 21? Please see what they have done now. That notification number 20/21, very, very important. This is all challenged in a writ in all the high courts all over India. Notification number 20/21 issued under 3(1) of the TOLA. Issuance of notice under 148 as per time limit specified in section 149 or sanction 151 extended up to 30th of April. They now inserted an explanation. This is what is the matter of writ before all the high courts. What is the explanation? They are telling hereby clarified for purposes of issuance of notice under 148 as per time limit specified in 149 or sanction 159 of the Act. Under this subclause, provisions of 148, 149 and 151 of the Act as they stood as on 31st of March 21 before the commencement of Finance Act 21 shall apply. How is it possible, my dear friend? You extend the timeline, I have no problem. But in that notification, how can you say which Act will apply? You are telling me the old provisions Act will apply. You are issuing notice when? You want to issue notice after 1st of April 2021 till 30th June 21. But you want to extend under the old law which is no more in force as on the date of issue of notice. But you are telling I am going to issue notice. Extension, I have no problem. Notification selling extension, you extend it. But when you issue notice thereafter, you cannot tell that the old provisions of 148, 149, 151 will apply because they have been deleted from the statute. Finance Act 2021 has been passed as on 28th March. So when you are issuing notice as on 1st of April, you are telling me I will issue notice under the old 148 law, which is not there in the statute at all. What is substantive provision? What is procedural provision? Is 147 charging section, your 148, 149? It is in chapter for your procedure for assessment. It is a procedural provision. Is it a charging section? So as on 1st of April, when you are issuing notice on 148, what section is there in the statute? What section is alive? You have, let me give you an example. You have constructed a building. Rishi has constructed 4 floors building. You have demolished the building now. Now there is a plain land. But the department is telling, Rishi has constructed 4 floors. On the 5th floor, they have demolished 4 floors. 5th floor, they are now constructing without there being 4 floors. That old section is removed from the statute. But now you are telling, I will issue notice under the old section on 1st of April when the Finance Act has been passed on 20th of March, whereby the old provisions of 148, 149, 151 and 147 have been altogether substituted, revamped, altered, amended, deleted, and substituted by the new provisions of 147, 148, 149, 151. Therefore, that should 148A, newly inserted section, they should apply when a notice issued under 148. All the assessing officers missed the bus all over India. None of the assessing officers all over India bothered to issue 148 along with order passed in 148AD because 148A is applicable to 148. The legislature missed the bus. Board has missed the bus. You cannot rectify this. 30th June is down and out. It's all gone. So whatever notice, in my humble opinion, whatever notices you have issued between 1st of April till 30th of June are void, are ab initio void, are invalid, is arbitrary, is illegal. And the court are going to quash it off unless we don't know whether they are going to bring one more ordinance. If they are brought in an explanation in the section itself that for 13, 14, 14, 15, the old provisions only will apply, then I had no problem. But you didn't make any amendment at all in the explanation. You didn't bring any such explanation. You never amended that act at all. You never brought such amendment. So you issued as on 148 notice without following the procedure of 148A. Therefore, all over India, you have gone in writ petition. Courts are telling, and they have come down on the department and fumed, stating that when you are issuing notice on 148 under the new regime, you have to compulsory under the old regime also, but it is on after 1st of April, after 31st of March, when the old law is no more in vogue, old law has been buried, dead and buried. You are bound to follow the new law, procedural provision. It is not substantive provision. Anyway. So the questions what we are answering is the explanation in notification valid in law. How can you put explanation in this notification? And how can you tell that you know which section applies? Who has given you the power? How did you get the power, sir? Have you got the power through parliament? Has the parliament, Lok Sabha or Rajya Sabha, etc., pass this? Can they extend the validity of any section by way of notification which has been repealed by the subsequent act? The act itself has deleted the old statute, that old 148, 149, 151 has been deleted by the statute, but you want to issue notice under the old 148 after those sections have been repealed because 28th March Finance Act is passed. So the new act replaces the old act. So how did you get the power from? Absolutely no problem, sir. You are extending, you extend. I am also supporting you. There is pandemic for you, pandemic for me, pandemic for everyone. Department is well within your right, sir. You extend the time limit. But you cannot say that even the old provisions I will issue under the old provisions itself. If you are issuing under the 148, you have to follow the dictum of 148A. Meaning what? Conduct inquiry, give opportunity of being heard, that minimum 7 days time, maximum 30 days time, again extension of time, then pass an order 148 AD. What is the time limit? 30 days from the end of the month in which reply is received by the SSC. If no reply is received by the SSC, again 30 days from the end of the month in which time limit to furnish reply is expired. Again, I think it is travesty of injustice. For 13-14, 6 years, when did it ended? 31st of March 20. For 10 days delay, 20th March. Up to 20th March, what were you doing, sir? You did not issue single notice under 148. With all humility, we have the finest of assessing officers. I have nothing against them, sir. I have myself represented, and they are all, we have the finest of the assessing officers. But you could not issue notice up to 20th of March, my dear friends. For just 10 days delay, you want 12 plus 3 months, 15 months? You want 15 months time? How far is it logical and how far justice is served? It is left to your conscience. Anyway, so now when you come here, what is the position now? The government has the power to extend time as per Relaxation Act, no problem, sir. In the present, where a specific provision has been passed and made Finance Act 2021, it cannot be said that the Relaxation Act gives power to government to temporarily suspend the provisions of some sections pertaining to reassessment. So provisions of 3(1) of the Relaxation Act gives specific power to government to relax the rigors of timelines of some of the sections, including reassessment, but it does not say that the provision which has been discussed in the Parliament and made an act with the assent of the President. Naturally, Finance Act 2021 was passed with the assent of the President. 20th of March will not continue to be in operation. You are telling me what is already discussed in the Parliament. President has given his assent. The bill has become an act. You are telling that provisions will not apply. What will apply is the explanation to the notification. So this will not continue to be in operation or shall be operated for a limited time frame as per the old regime. Now, if you see here, these are all, lot of writs have been filed. If you see this Armada D1 PT Limited, this is of the Shaporji Palonji. Clearly, what they say, the court is telling notice for reopening issued 7th April 21 and 148 for assessment year 13-14. While notification 20/21 CBDT had extended the time to issue notice on 148, which were time barred on 31st of March to 30th April 21. However, 148A, which has been introduced with Finance Act 21, with effect from 1st of April 21, which requires certain compliances to be followed by the assessing officer before issuing notice on 148. AO has to conduct an inquiry and also should give a reasonable opportunity to be heard before issuing notice on 148. Procedure laid down by 148A not followed by AO. Therefore, Honorable Bombay High Court granted an interim stay, etc. Again, Tata Communication Transmission Services versus ACIT, Mumbai. Clearly, what are they telling? Assessee has challenged constitutional validity of Section 3 of the TLA Act, your taxation, etc. Issued thereon on the ground that despite Section 148 and various other provisions being substituted by Finance Act 2021, with effect from 1/4/21, the TLA Act 2020 allowed revenue to issue reassessment notice under non-existent old provisions of 148 on and after 1st of April 21. Assessee has submitted that impugned notice dated 21 May 21, which was based on non-existent earlier provisions of 148 could not be issued. An authority was not empowered to issue the same. Similarly, Delhi High Court in Ansal Properties and Infrastructure Private Limited and Pranav Ansal, they are telling what is here. Ansal Colors Engineering, Mudra Finance. Again, Delhi High Court, Ansal Colors Engineering, SEZ, etc. Impugned notification is contrary to settled principle of statutory interpretation, namely that any action taken post the amendment of a procedural section would have to abide by the new procedure stipulated in the amended act. By virtue of a notification, which is a delegated legislation, the date for implementation of statutory provision as stipulated in the act cannot be varied or changed. Similarly, my Karnataka High Court admits writ concerning Wipro Group against reassessment notice under the old regime. Same thing, what the court is saying here, assessee was issued notice on 148 under section dated June 30th, 21, without adhering to conditions precedent set out in 148A. So assessee, apart from challenging the validity of notice issued on 148, has also challenged the CBDT notification number 20/21 dated March 31, 21, and CBDT notification number 38 dated April 27, 21, as ultra wires the provisions of the Act and the taxation and other laws, your relaxation and amendment of certain provisions Act 2020. In case it is held that the extension of pre-amended reassessment regime does not require revenue to comply with procedure of 148A. Assessee has also contended that CBDT notifications and explanation therein merely grants an extension of time, cannot possibly be an exception to the procedural conditions required to be fulfilled for reassessment of income under section 147, 148, 148A as applicable with effect from April 1, 2021. So, host of the other judgments are there, all the courts. This again, Bombay, High Court of Bombay in Sahil International. Despite enforcement of Finance Act 2021 with effect from 1st of April 21, which substituted section 148, said notification has allowed revenue to issue reassessment notice under old provisions of section 148, and thus notice under old provisions of section 148 could not be issued on and after 1st of April 21. So, host of judgments, again, Manmohan Kohli, host of judgments are again Delhi High Court. So, all these are writ petitions now. This has come yesterday only, 20th June, in Janata Dal United. Janata Dal United versus Union of India. Same thing. Notice under 148 dated 28th of June 2021 issued for assessment year 14-15 lacked proper sanction under section 151 and also failed to adhere to the procedure under section 148A, which came into effect on April 1, 2021, and therefore it's violative of the new reassessment regime. Therefore, Delhi High Court, as we discussed, Manmohan Kohli in Mudra Finance, Bombay High Court in Armada, Tata Communication, Karnataka High Court in Pioneer Independent Trust, etc. So stay on the impugn notice. So, my dear friends, we have finished the presentation. Now, I thank all the participants for very patient hearing. I thank my chairman, B.T. Shetty sir, for having given me this opportunity, and also I thank him for having made me the coordinator and director for this new tax audit program, what we'll be having on 19, 20, 21st, 9-hour session, my dear friends. And we have selected 4 speakers. Chairman has given me a free hand. I have selected 4 speakers: Dr. Rakesh Gupta, advocate from Delhi; Kapil Goyal, advocate from Delhi; again Sanjay Agarwal, CCM member now from Delhi; and Deepak Chopra from Bangalore. And we will try to discuss, all the nuances and technicalities and interpretation of tax audit. Thank you very much for very special, very patient hearing. Thank you very much.
Thank you very much, Naveen ji. We had an excellent session on reassessment under new regime. All the nitty-gritties, all the issues you have covered. I think we had an excellent session. Thank you very much. On behalf of Bangalore branch and on behalf of all the participants here, our heartfelt thanks to CA Naveen Khariwal. Thank you very much.
Thank you.
Thank you, participants. Thank you very much for your active participation, your interest in the program. Thank you very much. Keep visiting bangaloreici.org for all our upcoming programs. Tomorrow there is a very, very interesting program. Please register for that. Again, 19, 20, 21st tax audit, which Mr. Khariwal already mentioned. Please register all the programs of Bangalore branch. Your encouragement gives us strength to conduct more and more good quality programs. Thank you very much. Thank you very much. Okay. See you. Thank you. Bye.